A lot of attention is being paid to the numbers that have come out that suggest that the Chinese economy has finally surpassed the Japanese economy to become the second largest in the world. At Stratfor, well, we look at the GDP numbers and we think that they are interesting and that they shed some light on the issue. There's a lot more to it, and the GDP numbers do not necessarily represent strength. And we don't see the Chinese economy as substantially strong. Chinese economic growth numbers have been the envy of most countries around the world. The Chinese economy seems to put out double-digit or very close to double-digit growth numbers, even at times when the rest of the world seems to be in a slump. One of the things when we look at these Asian economies, these economies that are based very heavily on exports still, is that it's very easy to have very high growth rates and yet not have a very strong profit margin. And that's one of the issues that we have to look at when we look at the Chinese is, are they really creating wealth at home, or are they just creating a lot of flow through in their economy? For the government, it's imperative that they continue to find new jobs, new employment, that they continue to find money for social services for this very massive population. And to do so, the Chinese have relied upon low-cost exports, trying to become the exporter to the world. To do that and remain competitive, you have to maintain very low margins. And one of the things we hear a lot from the Chinese companies is complaints about just how low their margins are becoming, sometimes even to the point of being negative if it wasn't for government subsidies. The government and the economists recognize in China that they really need to shift to a more domestic-oriented economy if they want to be strong, that they need to break down the wealth gap, that they need to increase domestic consumption. But the problem is that they seem to be unable to do that. Every time they take steps to do that, it creates potential social backlash, and the government is much more concerned about what happens when 1.3 billion people get angry than they are about trying to run as fast as they can just to hold their economy at stasis. When we look at China, we really see, in many ways, some similarities to what we've seen with other Asian economies. And we see the same types of attempts at growth path. And we also then see that we're facing a limit to that model. So this government is going to be facing a crisis in the not too distant future. And our long-term view is that this model that the Chinese are doing is unsustainable, that the economic crisis is going to become a social and political crisis. And that's going to cause some massive changes in how we look at China and what we see in the country.